Dan, I want to start with you. So the jobs report, we had a beat on expectations. We had that unemployment rate elevated. It's what the Fed wants to see, right? But you also have that PCE data coming in a little bit hotter than expected. So what's your read on the jobs report this morning?
Well, the key and what everyone is looking at is what's going to happen with the Fed and interest rates. So one side of the coin is to say, well, we got some pretty positive information related to the jobs, as well as, although unemployment did tick up, it's still a real good number. However, when you are looking at where we are with inflation, you can't just look at that year over year, which is what the president is doing. You have to look at where we were last year. So if we were at 9% year over year last year, and then we're 3% over the previous year, we're up 12%. And that is what people are feeling. So when we look at what the Fed is going to do, and we don't really know, I'm in the camp that says we may still have to continue to raise rates because inflation is not receding the way it needs to be.
Well, I love your passion, Dan, and I think you're right to put this in perspective of where we've been. This has been a long journey. Keith, I want to get your thoughts, though. We saw that cooling in the jobs report, especially with the fact that we had that revision, 110,000 from June and July. Definitely what the Fed wanted to see. Your thoughts, your predictions. Do we get another rate hike before the end of the year?
Well, let's unpack two of those things. I think the Fed has lost the plot a long time ago, and their math is more cooked than the Christmas goose. So starting from that vantage point, yes, I think they're going to be foolish. They're going to continue to raise rates, even though they're clobbering the American public and eviscerating savings.
Yeah. So, Dan, I want to piggyback on that because, you're talking. I know that you think that the Fed does need to raise rates at some point. So let's talk about what that could do to the markets, because higher interest rates are going to be more pressure on those regional banks. I've been looking at the balance sheet, seeing that deposits are costing more. They're not getting enough in from the loan side. And of course, that would do a terrible thing for the commercial real estate market. So what happens if we do get another rate hike from the Fed for the markets? Do you think that you're going to see, we see red on the screen right now, more of that if the Fed were to hike?
Yeah, we're going to see that. And we're going to see a couple industries probably take it on the chin pretty badly. And that includes banking, as you're alluding to, number one, and also the real estate market. We see what's happening with these rates and what it's doing to the housing market and the ability to move property. It's a terrible thing. But it goes back to inflation remaining stubborn. And we have to attack that problem. Now, listen, when rates go up, the market is going to feel the pain, especially when you look at where bond rates are and where money markets are. Those rates are pretty high and they're also secure. So I think people are going to take money off the table.
Yeah, I think you're right to mention the bond markets. It's definitely certainly more attractive to go to some of those secure investments with the volatility that we could be seeing in the market. But I do want to get to some specific stock plays. So Keith, we've had some movement with Tesla today, but I know that you're hot on a couple of battery plays. Tell me which.
Well, again, I'm going to stick with Tesla above all, but Panasonic is interesting, Albemarle, because, EVs are not going to go away. They're an eventuality. The question is, what do you make of them in the interim? We're still going to need dinosaur juice for a long time to come, but the battery market's finally warming up. We're bringing those sources onshore, and those are companies that could do very well. I'm also very keen to look into the tech space, because if you really want to beat inflation, those are the companies that are going to do it.
Yeah, that's right. And I just want to stay with you for a second. You also, we've had some interesting news from AWS, Amazon, that they're going after small and medium businesses with their offerings. What do you think this spells for AI? Is this just a big tech play, or are we going to see this really impact everything out there in terms of business?
My goodness, everything ought to be in all capital letters. There is not a business on the planet that will not use or interact with AI within the next 5 to 10 years in some form. Those that do not will not be in business 5 or 10 years from now. So this is not a temporary or transitory trend, to borrow a term from Jay Powell. This is the real deal and possibly one of the largest investing trends in our lifetime. I remain stunned that so many people cannot see this developing, even though it's right in front of their faces.
Well said. Well said. I think, we often wonder, oh, is NVIDIA going to really keep those gains? But when you put it in those terms, it really makes sense that we are going to see this revolutionize every industry. Dan Geltrude and Keith Fitz-Gerald, thank you so much for spending your Friday before Labor Day weekend with us.
Thank you.
Thank you, Kelly.